So eBay turned down GameStop's offer. I think they said it was neither credible nor realistic, and everyone's sort of laughing at Cohen. But I think they failed to realize he's played a good game from an investing perspective. I know eBay's up sort of 10%, and he had a stake in it. He bought a stake, so that stake's increased. And it highlights our channel's perspective, as we mentioned in the last video, around sort of win-win investing via takeover and acquisition opportunities. Something no one realizes is actually possible. So in this video, we're going to highlight why actually this was a good and clever deal. GameStop's strategy, the cap with the sort of half cash, half stock offer that people were sort of mocking, but actually there's some information there we should go over. The sort of the cap table, the financials versus eBay's. What is the strategy and how we can actually implement that for yourself, no matter how much money you have. You know, you don't need to have billions to do these sorts of deals. And then how we predicted moves like this a year and a half ago and a year ago. 5 out of 5 of those predictions rising 50 to 100%, some rising even 300%. And we'll show where those are today. We'll show a small new batch of new stocks to consider. We haven't done as much dive on those, but we'll show those. And then, so all in one video, you're getting the news, our track record, and then how you can make money off of the back of this video. Why you should listen to us on this video at all. I mean, we just mentioned 5 out of 5 of those companies rising 50 to 100%. But in terms of general macro things, we called the Bitcoin top at 123K, which no one did a video on. I mean, you can find our channel and go down on the list of videos and see that. We've had a sort of 90% stock win rate. We've called pretty much every major dip, even the recent one, which was only about 10% and then's rebounded. We've also called sort of 2 to 5x in commodities, oil, silver, gold, natural gas. And on top of that, we're also showing you how to protect your assets and cash and pay low to zero tax so you keep hold of your gains. But without further ado, Craig, let's go to that first point. And although people are mocking Cohen, why is it a good and clever deal? And what sorts of things have you been picking up on?
Well, let's look at what eBay said, and what the eBay board said was absolutely predictable. It's what any board are going to say when they're hit with an unwanted takeover offer, because you keep in mind the board, their main consideration is protecting their cushy jobs and their compensation. So they've come out and said, look, there's financial uncertainty, where the letter that the financing letter they've got from the GameStop half from TD Bank is not credible. That's the $20 billion financing,
Yeah.
and it's highly conditional, and it's dependent on the combined entity achieving a certain investment grade credit rating, which is not guaranteed because of the potential leverage in the deal. So yeah, they're valid enough points, but I think those can be overcome. And I think Cohen hit back strongly at the eBay board, saying, "Look, these guys don't have any skin in the game, basically," which he's absolutely right about. The directors have got almost no shareholding. Any shareholding the chief executive has in the company has come from his compensation package,
Yeah.
and these guys have been paid millions. They haven't risked their own capital at all. eBay, basically, they've got this very well-known brand that everybody's heard of, and they've done nothing with it. And he's highlighted all the money they're wasting on operational costs. He points out they spent almost 2 billion in marketing last year with no return on it. The costs are bloated. The executives are being paid overpaid, and they're not performing. And he quite rightly makes the point that if you're going to have a company like that, you want people with skin in the game. All the best companies have a CEO or chairman with skin in the game. And his point is, if he gets control of eBay, then he has got this $5 billion, 5% personal investment in eBay, and he's much incentivized to make it work. And I think that is absolutely right. Whether he gets control of it is another matter, because the big shareholders in eBay are all the usual suspects, the big Blackstone and the big managers,
Mm.
which own the percentages and everything, although they own them on behalf of pension funds and so on. But
Nominees and stuff. Yeah, yeah.
but the fact is they control the votes.
Mm.
The people with the money invested
Yeah.
in the funds that they're managing don't have control over the votes. So companies like Vanguard and Blackstone, who I think combined control about 20% of eBay, they're the ones that are going to make the decision. Cohen says he's going to go directly to shareholders, but these big funds are probably going to be the ones making the decisions. So
Exactly.
how they see the future is is going to be key to the whole thing. But as we said in the last video we made on this, it's not the only way to win this game, getting for the takeover to be successful. He may end up getting a board seat, for example, with anyone with a substantial position in the company can ask for a board seat. So he could get a board seat, end up getting control of the company himself without doing the takeover, which would be a pretty arguably could be an even better position to get himself into, which is what he did with GameStop initially. He
Mm.
bought a stake in this company that had more cash than its market capitalization. He
Yeah.
bought, I think it was about 9% he bought in the company, and
Yeah.
he ended up getting control of the company. So could he do the same thing with eBay? GameStop actually have more cash than eBay. They have about 9 billion in cash to eBay's roughly 5 billion in cash.
Yes, yeah. eBay had 3.8, maybe you're right, 5 billion, but they have some debt. So you're saying 5 billion for eBay, yeah. It's interesting. I mean, the point I was going to make there just is we're saying, trying to mock him and say this is neither credible nor realistic. They're not the ones who could even have a say in it if they're not the ones who are the shareholders. So the fact that they're sort of making a mockery of him, they have limited they have some power, but they have limited power on what they can do to stop him if he starts to go to the other shareholders and try and
Yeah,
build a stake and vote them out.
he has said that he may go directly to the shareholders,
Exactly.
and he called the board a bunch of losers, which I think is probably quite an appropriate description of them. And these big corporations are full of people like this that have not they're not the founders of the company. They've got no skin in the game. They've got no investment in the company, and their biggest thing is to protect their own positions. And I've been involved in takeovers myself, where you've got exactly these type of people. They're professional directors. They add no value at all, but they're very good at coming out with things like corporate governance and
Yeah.
all the things that making sure the I's are dotted and T's are crossed, and not adding no value to the company along the way at all. And the
Yeah.
corporate world is full of these types of people, and that's why if you can dislodge these people, you
Mm.
sometimes find sleeping giants underneath, and eBay might prove to be that. But whatever, however this turns out, Ryan Cohen has put eBay in play because if he doesn't succeed, as we said, he may end up getting control anyway, or
Someone else does it. Yeah.
another bidder comes in and buys it, which I think is maybe more likely an Amazon or some or Walmart or one of these other big companies that could easily swallow eBay and make something of it. So I think when you look at the stock price compared to where it was before the takeover bid was announced, it's now up 116. The value of the bid is 125. So someone else steps in and puts a bid in. Again, the offer would have to be above 125. So there might be a little bit of upside left in this. Yeah.
Yeah, exactly. I mean, you can see exactly when the announcement was, it gapped up and then that's on a roll. It sort of injected some attention, volume, and marketing. So, it's free marketing, free almost IR. I mean, I do IR and it generates attention. But yeah, looking at how eBay's been moving, I mean, that stake has increased. So you can see the strategy. It's like, there's many angles to it, and it's not quite the same as our strategy because, like you said, the cash is nowhere near the market cap of the company, and they have some debt, and yes, it's not exactly the same as these takeovers below asset value or cash, but it's a business that's earning a lot, and these sorts of companies are valued on earnings. So yeah,
So
that's
it's a business that's got global recognition,
mm,
and it's obviously not being it's not being managed the way it should be. It's not being managed aggressively to grow the business. And
mm,
if you used eBay 10 years ago, 20 years ago, and you look at eBay today, nothing much has changed.
yeah,
But if you do the same comparison with something like Amazon, they've really moved forward. So
yeah,
that's the difference between a business that still has its founder involved, and eBay where the founder
mm,
Pierre Oudemars, he left years ago, and although he's still got a 4 or 5% stake. He's been selling that his stake down for his philanthropic activities. So that's the difference. Amazon still has Jeff Bezos heavily involved, still has
yeah.
a huge stake in it, and eBay with its founder jumped ship a while ago
Really
to
good points.
focus on other things.
Yeah, really good points. I mean, exactly the point mentioned earlier about people not having stakes and therefore not taking the company's stock very seriously. They're just interested in their wage and bonuses and things like that. It's the same one we'll touch on earlier as a company that we covered that rose after a takeover. I spoke to them on the phone and they literally said to me, we're not really interested in you promoting or talking about our undervalued stock. We just want people to get involved with the pensions and the business activity of the company so that we can basically get commission on those deals rather than actually the stock moving. But yeah, but then we also said we were going to cover the GameStop financials, which is another very interesting thing. So yeah, 9 billion market cap. Yeah, now it's raised money. It's got, these 400 million figures off of in profit off of the raises. The net debt is nearly 5 billion, which is amazing considering the market cap of the company is 9 billion. Normally, we look for companies that have 9 billion cash with a 9 billion market cap or even greater cash. But that whole situation there is actually suggesting that GameStop might even soon be undervalued. I know they are diluting because they've had to dilute for the raises, but that has increased their book value per share by doing those raises. So it's not actually being a net negative, as although almost certainly raising is normally a bad thing. But I would beg to disagree on that. And actually looking at the GME chart, I had a look last night, and if you look at where it's consolidated over the years, it's constantly bouncing around that $19 to $20 range. And originally that book value per share was only, $4 or whatever, way below, where that stock was heading before the hype and the short squeezing. That's exactly where it's heading back down to. But now it's now at that sort of 12 to 14 range. It's 12.1. But now he's doing more interesting things with the company, and there's actually some excitement around it. Credit to him, and actually, it might be something that people
Well,
want to consider.
yeah, has really turned the company around, Ryan
Mm.
Cohen. But he does have a track record as of operating successful e-commerce businesses.
Yeah,
When he had the pet food business in Canada that he sold for 3 billion, so he's got a track record of doing these things, and he's really turned around GameStop, and it's become profitable.
yeah,
Which
yeah.
is a tough business to make money in selling games from physical stores nowadays. I mean, that obviously is a really tough business model.
Yeah, exactly. It is, and you can see that just in the financials. Look, very poor. Even whilst all the short squeezes are going on, still terrible financials coming out, and then boom, all of a sudden, big flip, and now and now you got earnings per share growth and all sorts. So, like you said, I think in the last video, it's not even about the business. The things we're talking about, it doesn't even matter what the business is doing. It's just, is it undervalued? Is there a good person behind the wheel? Are they a founder? Do they have a big enough stake? And can this business be continue to grow in its existing model? Can it add new business, or can it just spin out into a totally different model
But I think
entirely? It's got a listing, and that's the one of the most valuable things in the world. So
that's a good point because what GameStop, what they did figure out was
mm,
it's much more profitable to sell their shares, sell their paper, they did a couple of interesting debt issues as well
yeah,
for with zero coupon. But they've really what Cohen's doing is really using the listing to achieve other things. And if the eBay thing doesn't come off, I'm sure he'll be looking at other acquisition candidates as
yeah,
well. So yeah, I'm impressed with what he's done at GameStop, and I think yeah, it's going to be one to watch for the future because it may do some interesting deals.
exactly. I mean, he might want to switch. He might want to tune in right now because of the companies we're about to mention. Um, but yeah, for this is the most probably interesting part of the video for people because we're blending that strategy with our strategy, which is those trading below cash. Yes, we look at sort of small and micro caps, but there's a couple of bigger ones that we're now going to go through. We'll just quickly go through a track record on some we've covered in the past. But yeah, that's definitely, we can be advising companies and individuals, no matter how much money they have, to actually do some little takeovers or just buy stakes in companies that could be taken over or could just do something interesting. I mean, I know some history on the ones I'm about to share with you. So US. So here we can see, Grow Stock, US Global Investors, great ticker name actually, Grow. It's on the NASDAQ. We first covered that. As it said in there, sort of 2024, end of 2024. You couldn't really have got in a better sort of time frame there. I mean, it did have a small dip, but when it's traded, if something's trading below cash here, you have moves that go down. But if it's trading below cash, as this was, so it's 37 million, 35 million in cash. Earning a book value per share is 3.5. The stock's only at 2.6, but it rose up to 3. So you can see how it just fluctuates around those levels. It's got an underlying profitable business model as well, as you can see down here. It's also got no history. It's actually anti-dilutive as well, so no history of dilution, which is really good because it suggests that they will unlikely, issue shares aggressively in the future. And they're just continuing to run the business model. So that's one which, yeah, maybe had a small dip, but then has risen maybe 50 to 100% from where we first recommended. And if you got in at the level as we suggested, but also as it dipped and then bought the dip because you could see the company was undervalued. It was trading below its cash, 35 million cash, and that negative number is a no debt number, crucially as well. Whereas eBay, when we looked at those financials, actually, there was cash, but there was also 3.8 billion cash, but then 2 billion in debt. So, there's these things you have to bear in mind too. But the market cap, for this one, 30 million. So an interesting one. Let me just see if I can get the chart in a clearer way for us here. Yeah, so you can see how, we were first covering it in this sort of zone here in November. I mean, look at that, bit of a dip, a bit of a shock for people, tiny dip really. But if you go from here or even from that dip up to there, that's 50%. I mean, all of the ones we're about to mention basically have risen 5 out of 5 of the companies we mentioned, 5 out of 5, 50 to 300% upside. So, yeah, so that was the first one, as you can see from the video description there. You can go watch the video if you want and learn more about the strategy. So that was one. Then we had McChip Resources, which you can see from here has already gone even more parabolic than, I mean, even maybe some of us were expecting. But let's first go over the financials. Profitable business again. It will be just, a VC firm investing in resource companies, making a lot of money now. 2026 isn't out yet, but you can see how that's grown as well. And then, 11 million in cash, and that cash pile growing as well. No dilution, stayed at 6 million shares for the full time. You can see all the financials here, 2.45 book value per share. So it's actually really undervalued now as well. But when we first covered it, because of the strategy we're mentioning, okay, it must have done a raise or something. But I should know it's back down to the level it was at before. So you can see how we mentioned in November and 2024, just as 2025 was hitting, within 6 months and a few months, that stock rose from, where it's come back down to now, 70 cents, all the way to 300, up 300%. And it had another burst back up to there as well. And then did a bull flag. Sadly, it must have done a raise or something recently. But so actually might need to wait for those financials to come out again. But based on it currently, this could be another buy level because it's now down here again. And when these things do get attention and volume, that means that they're less effective. But this is one that seems to be quite promising. Is back down to the levels we'd originally tipped it at. But is growing a good cash pile. Hasn't diluted or raised, and the book value per share is saying 2.45 here. So that suggests potential 300% uprise like last time. Some of these aren't necessarily growth stories because they're micro caps and they can move like that with exciting news. I mean, another example of that where it just moves and we can take profit is a company called Marchelle Capital. I mean, it's actually losing money, so this was one we suggested was a bit more of a risk, but the cash pile was so big once again. I mean, 3 million cash to a 3 million market cap. It could basically be a takeover opportunity because the shareholders were so small, someone could come in and then take over that cash for maybe a third of the market cap, which then meant that was still an okay deal to do. This one does have a bit of a history of diluting in the last few years, but 2.456 share price for a current one of 1.85 on the book value per share. So I'll just pull that up quickly just to show you the sort of percentage move. And if you guys are, fed up of the track record, you can now skip to the timestamp ahead, which will have, our latest tips we're about to cover in a second. But, once again here, they're sitting on that cash, nothing's really happening. And then boom, maybe they get a deal that comes through, or there's some hype, or I think for this, it was a property deal. It rose all the way 220%. So you had plenty of days to take profit here. This is one I was a part of and actually took profit. So, while I tip and, we tip and we put our money where our mouth is. And, for this, it was like a planning permission deal, but it wasn't guaranteed. So, you have to weigh the odds there. And it seems like maybe it didn't happen. But, it's then had small bounces off of where we first tipped because that cash pile is so big, constantly going up and down off that level now in here. it depends now if they're going to continue to lose money or not. You know, there's some more risk associated with this one, but it just shows you if there's someone sitting on cash, cash is king, and that can really move the needle and move your investment. So another one that you could still potentially be looking at today. Let's go back to here. Last one here, I think. Actually, no, two more. Mindflare, another good one. Actually profitable. Has a history of dilution though, which is bad, but that's because they've become more active. Book value per share is 1.98. Share price is only 50.5. Market cap's 3.5 million, and they have 10 million in cash. So once again, big discount to the where the cash is, no debt. Should be maybe even 3 times here just on the cash alone, let alone the operating business, which has started to now be profitable. But if we pull up the chart on a more accurate thing here, when we first covered that, it rose kind of a ridiculous 200%. It came back down and we tipped it again, and then it rose another 100%. I mean, now it has retreated back down to its sort of level here. And you might want to do some more DD on that company and see why it's down here again. That's why you just know you need to know the companies you're buying off by heart. But constant moves to the upside and explosive 100%, 50% gains, which is more fun than waiting for your sort of 10% moves in some of these slow NYSE or NASDAQ companies. The last one I wanted to comment on is one we pushed on the channel quite aggressively. It's actually not public anymore, but that doesn't mean it's not a good thing. It's actually a company called Walker Cripps. And this is one we mentioned earlier. The people we spoke to, I spoke to, I said, look, why are you guys not doing anything with your company? We probably have it in the video here. Initially, I don't think I've got the part for this, but we did a video where it had sort of, 10 million in cash, when the market cap was only about 3 million, which was kind of a bit ridiculous. The stock actually did fall a little bit. I bought into it, and then if you like we said earlier with the other one that fell slightly and then rose like US Global, even if you buy as it falls, some of these things can then later on get taken over. Or just improve, and there's exciting news that comes out, as was the case with Grow, which even after the dip still went up 50%. With Walker Cripps, it declined. If you kept buying, then there was a shareholder buyout. So the company went then private because literally they were doing nothing with the listing, but profit was made, and that takeover happened, and the stock rose massively before it went private because it was a buyout from the existing shareholders who didn't want the takeover happening, basically. So it was actually sort of the hybrid opposite of what we were talking there, where they go on the defensive, but that still drives the stock up.
They basically saw the value, and because other people didn't, they bought it themselves.
Yeah, exactly.
So
Yeah, it is what it is.
that's the risk of trying to do a takeover when there's a big controlling shareholder, and somebody already has more than, say, 30% of a company. Then the likelihood of your takeover succeeding if that party doesn't agree to it is very small.
Yeah, because Walker Cripps, there was a on the DD, it looked like it was 30%, but then upon more DD, it was 50% stake, which then makes it very hard to get a controlling stake. I mean, it was just below, so you'd have, yeah, yeah. Whereas the ones we're looking at here, which are the most interesting, like maybe Mindflare or Marchelle, there was literally 8% stakeholders that maybe came together to about 18%. But if you're looking for just that 29% sweet spot, you're only looking at a third of the market cap for 3 times the cash, which is therefore 10 times the cash because you've only bought a market cap of say 1 million for 300k that maybe had 3 million in cash, so 300k for 3 million.
Assuming you're able to get control with
Yeah.
you should be able to, but it's not guaranteed.
Yeah. No, that's important to stress that. Just to go on over a few interesting ones as of late. So we did some quick research last night on some other opportunities here. We've covered Grow. This is still a good opportunity now because of that. Show won't bother that. We've covered Grow. It's got sort of 30 million market cap with 35 million in cash. So, could expect some more explosive moves. And it has started to get above its 200 period moving average. It's interesting. Once these things fall, you see they get below their cash. They're not diluted. They haven't diluted for several years. The whole time, we looked over all those financials, starts to get above the 200, and that starts acting as support. So on these levels here where we are now, probably good buying zones. And then, it's risen, it could rise back up to there, and that'd be 30% move, 50% move. Not too bad. Other ones, though, new ones. This is sort of a small cap, not a micro cap, 100 million market cap. Really good profit in the space we love, which is gold. Sort of tracking sideways for the last year and a half. Actually, at a low point as well in the chart, which is great. Looking at the cash here, it's got 130 million in cash. Yeah, the market cap's 100 million. So you're just buying the business for free because you're buying it for actually a discount to its cash, and then the business is even profitable as well. So you're buying that profitable business model for free, which is very interesting. So that's one to
All these gold companies should be printing money just now because the price of gold has doubled in the last year or so, and their costs presumably have stayed pretty much the same. So
yeah.
if they're producing gold, they should be printing money.
Yeah, they need to be utilizing, that cash and those profits better maybe, or spending money on IR. Maybe they should be hiring us to do their do their IR because that's absolutely crazy. I mean, it's not got any, and it's not even I mean there's some dilution. I mean, that's what, some of these resource companies do. They do some dilution so they can expand their resource explorations faster. So it's not necessarily a bad thing, but there is some dilution to bear in mind there. Quite a big, actually, bit of dilution there towards the end of those last financials. But yeah, that's one. I just wanted to cover two others, which I think we have mentioned before. But another sort of, this is a micro cap again, but you see the value 99, really interesting. Trading sideways at 20 cents. But it's making money in the last couple of years. 16 million in cash for a company that's only got a 6 million market cap, and that is no debt. That is a negative number. The book value per share here is suggesting 60 to 70 cents, and we're looking at a 40-cent company. So when the company falls back to that 20-cent range as it's sort of sideways tracking in, let's have a look here. It's pretty illiquid, but this could be another takeover opportunity as well if they're shareholders to speak to and speak to them about taking over the company and moving it into an interesting business model. Whenever it gets down to that 20-cent range, there's just chances that it could have explosive moves. Even from there to there on small money, just play around money is 50%, back to the 60s, 170%, and it's just been moving sideways for all this time, and they're not doing any marketing, know nothing about it, but a very undervalued company based on the cash, and it's now improving profitability. It's very interesting. And actually, it's anti-dilutive as well. It's been going down in number of shares, so another positive as well. Just more green flags. Another one. So that was colored ties. Zimtu now is another one, which is really interesting. It's now starting to pop off. We had covered it before around that same 2025 time. So it went from 16 cents all the way up to 90 cents or around $1. I might pull that up as well. So another one that's potentially undervalued right now too. I mean, it has already had the move we were looking at when no one was looking at it here, up 500%. So a very good call from us again. But this is still one that's on the radar and maybe want to take action now. Coming back to the 200 moving average as well. So another interesting opportunity around this level, bearing in mind the financials are very impressive and improving massively too. These are listed in Canada, but when we first covered it, I think it was only just getting profitable, 5 million, 19 million. Now looking like it's going to come out of a whopping 24 million for a market cap of only 6 million. So very funny. And it looks like that cash pile is going to rise to 40 million with, yes, there's some dilution here, which can be a red flag, but because of how much cash they're earning, you'd almost say that you could ignore some of that dilution because it's kind of like the GameStop situation. That cash has been improving the book value per share at the bottom. So from 1 to 2 to now 2.5. And we're looking at a company at a 50 cent share price. So very interesting. I have actually spoken to some of these companies as well. I mean, this company, I believe, said that they weren't doing any, they do IR for other companies. So they're not doing any IR for themselves at the moment. So they're just letting their business do the talking. But they weren't interested in any IR for now. They said in the future that they probably will. So it just shows you can find companies that, in the future probably are going to get attention and they're just moving at a very, very big discount, but still up with that business model. I think this one might be a slightly more riskier one, but it's on the NASDAQ, so I will show it as just an interesting one. MediFast. I'll try and pull up on here. MediFast. Yeah, actually, it's nice. See, oh, it's already had a little move, so maybe the financials here haven't picked up on this, but I mean, from the consolidation where it was discount from cash, probably about 30%. But why could that be the case? It is losing a little bit of money as of late, so that's the red flag, probably a bigger red flag than the others. But this is one of the few we've been able to find on NASDAQ, other than the Grow US Global Investors. 140 million market cap for a company with 170 million in cash. No history of dilution. Actually, a little bit of, you know, anti-dilution here. Book value per share 17.8. Share price is 12.48. So, you have to keep tabs on that cash and why that's going down. I mean, that profit and why it's going down. But based on that, it seems pretty undervalued even where it is now. But it's hitting those levels, which is a big discount to cash, starting to trade sideways. I think we also look on technicals on this channel, so you can see it's come up to 200, bounced off of it, come off the 200, bounced off of it. Maybe we'd like to see it sort of get above the 200, go up a bit, bounce off the 200, and maybe turn up. You'd have to do more DD on this to see who the shareholders are, why it's starting to lose money, how it could start to get more money. But this is still potentially a take opportunity for someone, another company on the NASDAQ to come and take this over, bearing in mind the market cap's 140 million and it has 170 million, no debt. So yeah, another opportunity there if the shareholders aren't too big. A lot of information for people to digest there, but I think we've shown a couple of companies there that almost like a 100% track record on moving once they get down to this discounted range. But I mean, anything you want to add there? Some of it's quite complicated, but I think if people really watch the whole video and look at what we're saying and actually look at the companies and do DD, do their own research, they'll see what we see as well.
Yeah, I think it's important just to look at the details. But as I've said before on here, if you're looking at one of these companies like Zimtu, for example, would you buy a company for $6 million that's got 20 million cash and whatever the profitability was
Ridiculous.
on that company? Of course you would. So if provided you've got to be careful. We spoke before we come on here about some Chinese companies, and something with those types of companies, you've got to be very careful with your due
Yeah,
diligence and make sure that the figures are what they say they are, and
exactly.
you never go through that from an investor's point of view. So I would treat these small and micro cap companies almost like buying options, rather than putting.
Yeah.
It's not none of them are where you want to put your the major part of your funds. You want to treat them like options more than anything else.
Yeah.
But some of them could be good opportunities, and we'll continue to highlight them.
Yeah, exactly. I mean, as you said, you can only lose what you put in, and these, if you're just playing with play around money and they're moving 50 to 300%, it's worth the risk.
And
Um,
obviously, it's worth saying if you put money in, then it does unexpectedly rise 300%. For goodness sake, get your money out again.
yes.
Don't
I
don't
think
worry, because these small companies are very volatile.
Yeah, and they're more likely to have very irritating and scummy directors, and some of those directors might be watching. But I mean, some of them will probably appreciate that that's not them, might be everyone's. But this is an example here where we combine holding and then a big explosion of 300%, and then we use our moving averages. I mean, this actually was really hard to trade because it went up so much. But I'd say when you have an explosive move, you're trying to ride that explosive move. At least wait for two red days or for the price to go lower than the previous day's low. So even if you had, not sold into this, green candle here, waiting for maybe, a day where, the price goes lower than the previous day. So you should have been maybe all out or 70% out when the price fell below the low of this candle here. So around 3.3 or 3.1. That's still way higher from where we tipped it. And you should just be happy with the money you've made on
Yeah,
this
again,
time.
it'd be crazy not to take profits there when they arise, because
Yeah.
these small cap stocks, because the volume tends to be lighter on them, they can be very easily manipulated.
Yeah, yeah. Looks like a big fat volume. It looked like it was about to recover here as well. Look, it was starting to go up, and then it looks like some fat shareholder insider just
Yeah,
dumped like 20 million shares on them.
that's the issue with some of these smaller companies, which you're not going to get if you're trading some of the
Yeah,
larger things, some of the more mainstream things we've mentioned. We talk about like gold and silver and so on. You're not going to, the technicals. You can really believe in the technicals on these things.
yeah,
Whereas these small cap companies, I think that if you're using technical analysis, you have to be much more careful and be aware that insiders or other large investors can manipulate the share price pretty
yeah,
easily.
yeah. That's why we mentioned two NASDAQ ones because you can see how it's got above the
Yeah.
200 for this one. It's a bit more easily to predict. It's got regulatory things that it's got to live up to. So this is probably a good one. I can't remember what the other NASDAQ one was we suggested, but it might have even been this one, which was a little bit more risky.
Yeah.
MediFast.
But you can see there's real volume in those ones. So I think it's important if you're trading in and out of something, and you want to make sure there's real There's real volume there too.
Yeah, yeah, and exactly. And if you're going to do a takeover, I mean, this strategy we're talking about, maybe let's just finish on that. One, there's either got to be volume for you to get that 29% stake and make sure there's no shareholders that have a 29% stake. Two, if it's not got the volume, then you'll need to speak to the existing shareholders to do the takeover, and then you need to make sure all the financials are legit and all sorts of other things. But obviously, if people are interested, we can help them with that.
Well, if anyone watching is thinking of doing a takeover in any of these types of companies, I would suggest they come and hire us to help them with it.
Absolutely, yeah, yeah, no, and actually maybe just I think is maybe we should mention actually just quickly a couple. You've done maybe three or four of these over your time, and all of them have been pretty much successful, or at least if the takeover hasn't happened, you've been able to get out. I know my late father, who sadly is no longer with us, is the reason why we named the channel Ace Acquisition. Aidan, Chad Earley, Ace Acquisition, the perfect acquisition. I mean, he was known in on the street as the Midas touch or Goldfinger, and he was just doing these all day, every day. I mean, I know you were there with him and advising and assisting. And this model for him in the 1980s, I think he was turning over like something like nearly $1 billion in 1980s money. The profit was actually very low. I think it was only like maybe 4 to 5 million. But in terms of share volume traded, it was crazy, crazy the numbers. And I think he became one of the UK's youngest self-made millionaires, and I think he became one of Scotland's youngest self-made millionaires. So to throw around those things, there's more credibility if people have still hung around all the way to here. But yeah, I mean, I think how many do you reckon? How many ones do you remember? I think there's about four or five that really were amazing.
I think there's at least half a dozen of them that have been successful in one way or another. Maybe, because it depends how you define the success of them. Because just as putting something in play and someone else coming in and then buying it, to me that is a success. If you bought a 10% stake in something and that puts the company in play and someone else comes along and then buys it because you put it in play, then that to me is a successful deal.
Yeah.
And
That's
there's
actually a good honor, not honorable, but you've almost got the company to pull its finger out. You've then got them a strategic shareholder just by generating a bit of excitement in the attention. People might criticize you, oh, you made so much money, but actually nothing was happening. I'm the reason that now the company's on a upward trajectory and growing. So
Yeah, I mean,
yeah,
other scenarios, you're going to buy maybe 20, 25% of a company, and you end up getting a board seat, and you get control of the board, and you get control of whatever assets that company has, and
yeah,
you can use it to you can then take it in different directions. So that again, those are the types of deals that I've been involved in the past, and no doubt will be again.
yeah, exactly. And you can save these businesses from running into the ground as well. So yeah, awesome. Well, thank you very much. I think that's been a really helpful video, and I think probably one of the most important on our channel. I mean, the next video we'll have to do is the Hanson Trust video because that was, that's how a massive conglomerate was doing exactly what we're describing here. So yeah, we'll do that next. Thank you very much, Craig.
That's
Cheers.
it.
Bye bye.